And then once you get your entry, you target between the 0.382 and the 0.5. You take your profit, you get the hell out. All right. You don't you don't wait for anything more. Now, I particularly like sushi for this type of trading because the risk reward ratio is high. And I haven't had too many problems with getting wicked in, wicked out. Yesterday, I did try to short right here. I got wicked out 2 times and then I fell asleep. So I didn't really get caught up with all this mess, but I did get wicked out 2 times and then price continued up. All right. But some of the trade setups that I did take recently was uptrend, downtrend, uptrend. All right. You can see right here that creates a higher high. Right there, you can go ahead and set up a short position as long as you are below this line. Everybody always asks me, what is the if this and that statement that you're setting up? It's based off of this same setup. You take uptrend, downtrend, uptrend, or downtrend, uptrend, downtrend, and you create a if this and that statement line. Now, sometimes it's pretty much at the top or at the bottom, like this one right here. You can see downtrend, uptrend, downtrend. I did catch this trade as well, and I took my profit right about here. All right, because you can see we can take the top and bottom of all 3 trends involved, target between the 0.382 and the 0.5, and then take our profit. I believe that was like a 8 to 10 risk reward ratio. I'm not sure. But sometimes, in this case scenario, we have downtrend, uptrend, downtrend. You can see there's actually a big disparity between this local high or local low and this local low right here. But the setup is the same nonetheless. All right, if you get back above, and this is what we originally entered on back in, and I know I shouldn't say we, but a couple of people did enter on that with me. We have a 1% stop loss, and then you go ahead, you take the top and bottom of all 3 trends involved. You target between the 0.382 and the 0.5. I usually do smack dab in the middle, and then boom. You would have hit your take profit and been out of the trade. That would have been a 12 risk reward ratio trade, just like that. And that's really all I've been doing over and over and over again. It's a very easy setup. So like right here, you have downtrend, uptrend, downtrend. You create that local low. This one, I believe I got wicked out 1 or 2 times. I'm not quite sure. And the risk reward ratio wasn't crazy. I think it was like a 5 risk reward ratio trade right here. But hey, can't win them all. Sometimes they're great, sometimes they're not so great, but you just take them as they come. Right here, you got a uptrend, downtrend, uptrend, same sort of setup. I did not take that one. That's when I was sick. I was pretty much sick for, I don't know, I think it was like this entire stretch right here. But that's essentially the main basis of what I've been doing. There's nothing special to it. All right, you don't have to be a magic man. Right here, you got a downtrend, uptrend, downtrend. The only thing that's really going to separate how successful you are with this comparative to somebody else is like, what do you see? Because that's usually the disparity between me and other people. Is I've been doing this for a decently long period of time. So when I see price action, I look at it in a different way. But that just comes with practice. So one of the things that I did very early on to get used to kind of like the Elliott wave trend mentality was I went back to the beginning of Bitcoin and I pretty much traced out every single ABC that I could possibly see. And then once you start understanding that, these are the larger ABCs, try to find how ABCs are formed micro level. So remember how we talked about before, how 3 trends creates 1 trend? And then 9 trend creates 3 trends, which creates 1 larger trend. So if you can get used to that structure, you can then ask yourself, do I have an ABC, ABC, AB, waiting for a C in order to have the short? That's all you're looking for. So, but I mean, it's not just sushi. You can apply this same exact strategy. And I showed you multiple setups over the past couple of days. ABC, you set up a trade right here. You take your profits at the 0.382 to 0.5. Boom, you're out of the trade. Fantastic. Right here, same exact setup. You could even do it on the opposite side. ABC, set up a short trade, take your profits at the 0.382 of this. You're not waiting. You're not looking for it to come completely past your last local low. You're just getting in, securing some profit, getting the hell out, waiting for the next setup. And if you can do this on 2 to 3 coins, you can have a couple setups per day, hopefully. All right, I'm not guaranteeing every single day. As well as that, don't be afraid to re-enter. For me, I take the setup. If the setup is there, the setup is there. There's nothing that's going to change me from entering that setup. Over here, I was obviously asleep. But, that's a decision I made. So in this case, no, if I got stopped out 3 times, I would enter the 4th. Right? It's a robotic system. Right here, you get in, you take your profit. If it comes back down, you can even re-enter. Take your profit again. Unfortunately, I only got 1 take profit on that, but I wish I would have got all 2. So there's plenty of setups to be had on BTC, for example. All right. Over the past couple of days, we've had multiple setups as well. This is the one that kind of determined whether or not we were bullish. Last time we were on live stream, we were kind of dumping pretty hard. And obviously people, as I jumped onto that live stream, even me, was expecting it to break 29K and continue dumping. I really was. But when we did not break 29K, I said, okay, we have a bullish setup. We have an A, we have a B, and we have a C. If we get back above the local low of the A, we should resume being bullish. We're at a local low on the macro side of things. And if we get back above that, we should maintain a reversal setup. That's how you need to see price action. Don't view price action through the lens of these are my emotions and this is how I feel about the market. Just speak in facts. It's okay to have an opinion, to be bearish or bullish based on emotions, but understand that that is separate. All right, once you make a distinct difference between you and the trader, it starts to become a better deal because now you have an analytical lens while not giving up your humanity. That's really what it comes down to. So right here, even though you might have a bearish sentiment, you have to understand that there is a bullish setup. If anything, it is okay to remain bearish. Let's say you had a short open. It's okay to remain bearish, but you should at least start to hedge your shorts. If anything, make some quick profit on the bullish setup, get out because you still think we're going down. Just make sure that you are padding your losses. Okay, I'm gonna have to meet you. Jesus. I don't have, listen. I understand. Okay, everybody wants me to make a end-all be-all video on Elliott Wave. I understand the reasoning for that. A lot of people like the way I view things. But here's the problem. Elliott Wave is kind of subjective. So the best thing that I want to do for you is not to have me be the holy grail of answers. I want to recommend you the book. You can get it for free if you want to do that, or you can go on to Google Play and buy the electronic copy for $10. All right, it'll be worth your time. All right, Harmonic Elliott Wave by Ian Copsley. That is the book that I spent countless hours reading. It's very boring, but it changed my perspective on things. I can sit here, I can give you the basic rules of Elliott Wave, and I can try my best to show you how I see things, but nothing is going to make the difference between time and effort, because I took the time to read the book. I took the time to go back in previous price action and spot setups and really practice my perspective on how I see things. That way I can just load up a chart and instantly see trends. I can't do that for you in a single video. I just can't. 15 minutes is not going to change the hundreds of hours that I've spent looking at charts. You have to put in the work yourself. It's not easy. I'm not here to sell you a pipe dream. I'm saying if you continue down the pipe, there's a dream. But that pipe is long. And sometimes you might be a little bit too fat to fit through it, so you got to wait a little bit to skinny up so you can keep all going. It's a lot of steps. So that's the best I got for you. Obviously, I'll do it on stream all the time. But the continuous question, can I make a single dedicated video on Elliott Wave? The most that would be in that video is, okay, if you have a 1 to a 2, all right, the 2 is typically going to come down to the 0.382 of wave 1. I don't know what those are. I need to delete those. So if you have a 1, the 2 is going to come down to the 0.382 of wave 1. And then the 3 is typically going to be the 0.618. I mean, the 1.618 of wave 3. And then wave 4 is typically going to be the 0.618 of wave 3. And then wave 5 is typically going to be the 1.618 of wave 3. That would be the entire Elliott wave video, pretty much. Because that's Elliott wave. The book takes it to a different level, and you start to understand that everything is broken down. It's like just micro, and you can go as deep as you want with it. But it's a little bit more intense, and it's just not something I can throw into a 15-minute video and be happy with the information I give you guys. That's it. So I want you to learn from where I learned. I don't want you to think that I came up with this. I learned it from a book, and that book is not expensive unless you try to buy it from a aftermarket seller on Amazon for $700. I don't know why they're going crazy with the prices. I think it's because of us, but you can buy it digitally on Google. Come on, use your brain. Bullish. All right, so BTC, let's go ahead and see what kind of setups were on BTC the past couple of days. So this is the setup that we took initially. All right. Well, I didn't take it. I was already in a long, but boom, this could have been an easy scalp. You go ahead, you take your entry here, you take the top and bottom, you target between the 0.382 and the 0.5. Boom, you would have taken your profit pretty much immediately. It wouldn't have been anything extravagant. Now on BTC, if you are going to play it as if it's sushi in terms of the percentage gains, you're probably going to be using around like a 0.5 to 1% stop loss on that as well. A 1% stop loss on BTC still would have netted you about a 5 risk-reward ratio on that trade right there. Pretty good. Now, let me preference this. I don't want you guys to go to your leverage trading websites and start putting in 1% stop losses and losing 20 times in a row. All right? Can that happen? Of course. If you're taking your setups correctly, should it happen? No. You'll get stopped out a good couple of times on average. So, with that being said, I'm typically using around 0.25% risk on my portfolio per trade. That means if I lose 10 times in a row, I lose 2.5% of my portfolio, actually a little bit less. So if you do the same with a 2% stop loss or a 2% risk on trade, you're going to be losing 20% of your portfolio. Massive difference, same amount of trades. All right. So that's what I want to go ahead and say. Make sure that if you are playing this like close-knit game of trying to be as accurate as possible, understand that's going to come with some downsides. So you have to balance it out with low risk. All right. So if I hit a 10 restored ratio trade, I add 2.5% to my portfolio. So if I can make one trade a day, that's pretty damn good. All right. If I have 3 separate coins that I'm doing that on, you can see how it starts to stack up, where those small percentage gains over a long period of time start to actually build a nice, healthy portfolio. And that's something that I really wanted to touch on, was with the $100 to 100K challenge. That was the aggressive approach, which you have to have the right type of market where it is severely downtrending or severely uptrending in order to make sure that you have high probability of your type of trade being constantly hit. In the last case scenario, it was breakout trades. As well as that, it's a headache and your account's going to go up and down, up and down. If you want to last, just make sure that you're using good risk over a long period of time. If you want to make more money, you need to add more money to your account, right? Because I see too many people with like $2,000 portfolios using 10% risk because they want to make $1,000 per trade. Don't do that. Don't do that. It only takes like 5 losses and you're out 50% of your account. Don't do that. It's not worth it. That's the main thing. On the measure up, you pull for the fib from the bottom down instead of the top down. It doesn't matter. It doesn't matter. Like if you're projecting downside, you're going to pull from the bottom to the top. If you're projecting upside, you're going to pull from the top down. All right, in order to get the 1.618, either up or down. A lot of people go like, this is not right. All right, if I go target between the 0.382 and the 0.5, they go, that's not right. That's not right. What they're talking about is if you take this, the 0.618 is the 0.382. That's all they're saying. It's the same exact price level. The 0.5 is even the 0.5. All right, so just do the flip in your head. All right, so when I'm talking about this, don't be that guy. So go big or go home. Oh, be my guest. Be my guest. All right, so we've had a couple different setups. We had A, B, C. And then we had a larger one here, A, B, C. And then we had A, B, C. So we've had, let's see. Let me mark out these couple of trades here. 1, 2, and 3. Let's say that you just took these 3 over the past couple of days. All right, let's get the 0.382s lined up. Boom, boom, and boom. I've not bought my AMG yet. Car prices went up crazy. Actually, like the car that I bought a little bit ago is actually worth $5,000 more than I bought it for already. It's insane. Now, if I took it back to the dealership that I bought it from, they're probably not gonna let me slide. But I'll probably get face value, based on, pretty much exactly what I bought it for, which is pretty cool to think about. So we'll see. I'm not saying you're that guy, Jonathan. I was just saying don't be that guy. Not to you in particular. Don't worry, you're not in trouble. You're not in trouble. I'm not mad at you. And just sometimes there'll be that guy. So don't be that guy. Yeah, commodity prices have pissed me off. So I'm trying to redo a studio. All right, I want to have like a nice setup, like a theater setup, surround sound, recliners, my desk setup. I want to get like a nice L desk. So yesterday I spent all day trying to find countertops to use as desktops, uh, and they're sold out everywhere. So I went to Home Depot, found one. I had to settle. It's not even the countertop that I want. I had to settle, and it cost me like $1,000 for 2 countertops and legs. What? In what world? In what freaking world? I bought this one. This is a 74-inch countertop that I'm using as a desk right now. Uh, I bought this for like $180. Ridiculous. Bart, how you doing, buddy? I took my vitamin D today. Okay, I have vitamin D3. I don't know if that's the same. I think D3 is what you want. But I have it, and I took it. And I have my window open with light shining on me. All right, back to the math. Let's see. What did BTC give you the past couple of days? All right, so this one, let's say that you used a 1% stop loss on all these. All right, so boom. That was about a 5 restored ratio. This one is one of the ones where you probably would have gotten stopped out maybe a couple times. We'll see. 1% stop. Okay, how many times would you have gotten stopped out on this? Okay.